Hey everybody, it's Jack and welcome back. It is that time of the week again. It is time for another portfolio update where I'll update you all on how my Wealthsimple journey is going and how my challenge is progressing. To quickly recap for anyone who's new to the channel, I'm currently undergoing a Wealthsimple Trade challenge where my goal is to bring a $1,000 account up to $100,000 through saving like crazy and smart investing. So every single week I deposit around $200 into my account to invest into the stock market on a consistent basis. And the end goal is to one day be able to retire off of this investment account. And if you're looking to start your own challenge or investing journey, I highly recommend using WealthSimple Trade. It's what I'm currently using, and it's super easy and super beginner friendly. That's really the big thing. And there's gonna be a link down below if you want to sign up. You'll get 2 free stocks, and they could be anywhere from $5 in value up to $4,000. So it's a little bit of a cool thing they're doing to get people onto the platform. So I highly recommend using the link down below if you have been thinking about starting your own investing journey. Just take the plunge and go for it. So quickly before we dive into my account status and how my portfolio is doing, let's just quickly talk about the stock market in the week that was. We did see quite a bit of a shakier week this week. It had been going up, the stock market in general, over the past few weeks and months. As we all know, the stock market has been doing very well over the past little while. However, over the past week, we actually saw the S&P dip over 1.5%, and the TSX, the Canadian market, dipped just under 1%. So down week in both the US and Canadian markets. And this is not unexpected. The stock market, like I said, has been doing extremely well. So it's normal to have a couple of weeks where we're going to be down. But as a long-term investor, it's honestly good to see little pullbacks because you can keep on buying some of your favorite stocks at a better deal. And in the long term, in the big picture, it's actually going to pay off more being able to buy some of your favorite stocks at a lower price. So always keep that in mind when the stock market goes down. Make sure you have that long-term vision in mind. So jumping into my account status and how my portfolio is doing. On Friday, we saw quite a red day. My portfolio is down $78.57 or 0.79%. So almost down a full percent in a single day. Again, most stocks were in the red on Friday. For the actual week, we are down $131.01 or 1.31%. So again, not the ideal week, definitely in the red. And all time, the account is up $511.95. 5.46%. So I'm definitely happy with how the account is progressing. We are in the green and have made over $500 in the past, 6 months since I started this investing journey. So I'm definitely happy with that. So let's now jump into my actual spreadsheet where I track all of my stock positions and talk about some of the stocks I've been adding, if there's some that I've been selling, and also just updating you on my watch list on what stocks I'm planning to pick up over the coming weeks. And is there any deals on certain stocks that I'm looking to take advantage of? So diving into my portfolio spreadsheet where I track the breakdown of all of my stock positions, the weightings, etc., all the passive income from my dividends. So let's first start at the top with my stock positions. I'll go through them and talk about the ones I've added to over the past few weeks and just share with you what I've been buying. So the first major player that I've been buying is TD, Toronto Dominion Bank. This is honestly probably my favorite stock to buy and hold for the rest of my life. This is just a great dividend growth stock that not only grows in share price, but also raises its dividends consistently by like 10% each and every year, which is a win-win in my eyes. And TD over the past few weeks has seen quite a substantial drop in its share price. It's dropped around 7 to 8% over the past few weeks, which is pretty major for such a safe and consistent stock like TD. So I think right now is a great time to keep on buying TD. And I'm actually down on this position around 3%. So I picked up one more share of TD last week in the mid $82 range. And it definitely, if TD stays in these price ranges in the low 80s, I'm definitely going to continue to add to my position and really make sure to not miss out on this opportunity. TD is now the largest position in my portfolio, sitting at 8%. The next major one of my positions that I've also been adding to over the past few weeks is TELUS. TELUS, again, is another one of my favorite dividend growth stocks here in Canada. It has a great track record, and I'm just going to continue to add to this position over time. It currently is my second largest position right after TD, sitting at 7.4% of my portfolio. And I think I added 2 to 3 shares over the past week or two to TELUS. Currently up almost 10% on this position, and I'm really happy with TELUS, and I think it's a great stock to own as a Canadian. You really get some great diversity with TELUS because it is in the 5G space, it's in the telehealth, it's got a lot of different kind of business revenue streams going for it. The next stock I want to talk about that I own is not one that I've been buying over the past few weeks, but it's had a lot going for it. It's had a lot of different price movements and a lot of news come out. It is Canadian National Railway, ticker symbol CNR. This is my third largest position, sitting at 7.3%, and CNR has had so much news come out. The stock price shot up over the past few weeks as news came out that regulators were actually shutting down their bid for Kansas City Southern to acquire KSU. This has been an ongoing dilemma for CNR over the past half a year or so. They've been in a bidding war against Canadian Pacific Railway, CP. So once the news came out that their deal was getting shut down by regulators, the stock price actually shot up, I think, over 7% on that day. And this is obviously a sign that shareholders thought that they were overpaying for this acquisition and are actually happy that it got shut down. CNR then even made its way up even higher and was at one point trading around $160 per share. It's since dropped down over the past few days, and there was news 4 days ago that a large shareholder in CNR that owns around a 5% stake in the company is actually trying to get the CEO replaced and removed because of the failure of the deal with KSU. So this is kind of some negative exposure for the company, and the share price again has kind of dropped back down $10 in share price to $150. Still way up on this position. I'm up 14% on CNR. And I think even if they continue and get the actual deal with Kansas City Southern to acquire them, I think that's great because then their railways would be all over North America from Canada to US to Mexico and really just be able to take over. However, even if the deal doesn't go through, CNR is still a major player in the space, and I think would still be the largest of the actual railways. So I think this is a win-win no matter what, and CNR is a great hold long-term. So now taking a look at my growth stocks, which as always are underperforming still, we can see that they've still been getting hit hard. H2O Innovations, Good Natured Products, Green Lane Renewables, and DCM, Data Communications Management Corp, all still down between around 15 to 20% since I purchased them. I am still dollar cost averaging into most of these positions and really trying to lower down my average cost, as I do believe in all of these companies in that grand scheme of things, looking at the 5 to 10 year horizon. I've been adding to Green Lane Renewables 5 or 10 shares here and there every single week. I've also been adding heavily to Data Communications Management Corp, as this is one of my newer positions and I'm still dollar cost averaging into it. I pick up around 25 shares over the past few weeks, and I'm planning to add 25 more shares as the share price has dropped substantially. It's now trading around $1 per share, and it was at $1.40, almost $1.50 per share a few months ago. So quite a substantial dip, and I'm looking to continue to add into this position at these lower prices, as I do think this is a $3 to $4 stock in the next few years. So I'll happily continue to add at $1. I also want to quickly talk about Standard Lithium, as it has kind of rebounded over the past few weeks. It was down to around $6.50. It's now back up into $8.50. So quite a bit of a boost. This is one that I still think is overvalued in my opinion. It's still trading at above $1 billion market cap for a company that has not generated any revenue to date. So this is quite a steep premium on this company for not having generated any revenue, let alone profit. So this is one that I'm monitoring. If it does somehow come back down to between $5 to $6, I would get back into Standard Lithium. But at these prices, I'm just not looking to add to this position. And now to the main stock positions that I've actually been adding to over the past few weeks is actually my S&P 500 ETF, VFV. I've added 2 or 3 shares to this over the past few weeks and almost doubled my position. And the reason really for this is that first, it did see like a 1 or 2% dip, which has been not common over the past few months. It's just been going up and up and up as the stock market continues to hit all-time highs. But the main reason is the fact that I just want more US exposure in my portfolio. I currently only have around 15% of my portfolio being made up of US ETFs or stocks, and I would actually like to have this around 30% if possible. So I really think over the next coming months, I'm just going to every single week add 1 or 2 shares to either my S&P 500 ETF, VFV, or my NASDAQ 100 ETF, QQC.F. That gives me more exposure to the US stock market, as well as those big tech companies. So I've added a few shares of my S&P 500 ETF, and again, I'm adding more over the coming weeks. So I'm definitely gonna be adding more to my US ETFs and really just trying to set a base for my portfolio to grow consistently over time by having that nice US exposure. So now if we take a look at my dividend tracking to see how my passive income is growing over time and the actual dividends that I'm collecting off of my stocks, we can see that my annual dividends is just south of $300. So this is up over $15 from 2 weeks ago when I did my previous video. And that's really the big term goal of my portfolio, is to just continue to pick up a few dividend stocks every single week and really grow that passive income and snowball over time. My monthly average is now almost $25 per month off of my dividends. So I'm nowhere close to living off of my dividends, which is the end goal. However, we are really seeing this grow consistently as I continue to buy more and more dividend stocks and grow that passive income. And if we check my visualization where I track how much I've gained each and every month off of my dividends, we can see that already in September, I've gained $14 through dividends. And again, we're not even halfway through the month, and I still have a few more companies that are going to be paying me this month, such as Manulife, Canadian National Railway, Smart Centers. So I think this month we're going to break the $20 range for the first time and maybe even get to around $25 in dividends. And again, this is just kind of showing how by adding each and every week to my dividend stock positions, we're just going to see this chart continue to grow up to the right and over time eventually be able to start paying for things such as rent, utilities, and all of that in my day-to-day life. So now looking at my portfolio breakdown, we can see that the largest positions in my portfolio are TD at 8%, Algonquin Power at 7.2%, TELUS at 7.4%, Canadian National Railway at 7.3%, and then some of my ETFs like my VFV at 6%, VDY at 7%, and so on, with the majority of my stock positions kind of being in that 4 to 8% range. Those are kind of where I feel comfortable with an individual stock. And for sector allocation, it's kind of the same picture. This doesn't change a whole lot, but you can see that financials are my largest sector at 13.7%. This is my TD and Manulife. My utilities sector makes up 12.8% in my Algonquin Power and Fortis. And these are just really stable dividend growth stock sectors that just consistently grow over time and pay you that dividend, which is awesome. I also have 10% in my growth ETFs, 12.9% in my safe ETFs, which are kind of the S&P 500, and my dividend stock ETFs. And then also renewables is around 12.1%. But this chart is just great at being a snapshot of where you're invested and just trying to make sure that you're not over invested in one sector versus another. But I'm happy with this chart overall. And now in terms of asset allocation, we can see that I have 66% of my portfolio in dividend stocks, 11% in growth stocks, and 23% in ETFs. Like I mentioned, I'm really going to be trying to boost up my US exposure through my ETFs. So I plan to get my ETF positions to around 30% of my overall portfolio by boosting up my S&P 500 ETF and my NASDAQ 100. I'm also continuing to try to look to add to my growth stocks slowly and really just bring my weighting in growth stocks up a little bit more, closer to around 15%. I am trying to find a new growth stock to dollar cost average into. And I talked about in my previous video, I might start adding Trulieve Cannabis as a new position to my portfolio, as it is down quite substantially from all-time highs. So finally, now for my weekly watch list, the stocks that I'm planning to add over the coming weeks. Like I mentioned, the top one is my NASDAQ 100 ETF. This is an expensive ETF as it does trade around $120 per share. So this is going to take up the majority of my deposit for next week. But I'm going to be adding 1 share of QQC.F, again, for that tech and US exposure. And the other growth stock I'm going to be adding to is Data Communications Management Corp, DCM, as this one dropped heavily over the past week and is now trading around $1 per share. So I'm going to hopefully pick up 25 shares around $1, as I do see this like a $3 to $4 stock over the coming years. And there's an analyst price prediction at $3.60 that came out over the past month. So this is a company that I'm really excited about. I have a full video here on the channel and a CEO interview coming in a few days. So stay tuned for that. And then in terms of dividend stocks for the coming week, I'm going to be buying 2 shares of Algonquin Power, hopefully at $19.50, around that area. I think that's a great price to buy AQN. It too, over the past week or so, has dropped quite substantially from being around that $20 mark to now down at $19.50. So quite a substantial drop, and I am down on this position as my average cost is around $20. So I'm going to just continue to average down into this position and continue to grow it, as it too is a great dividend growth stock. And then I'm also going to be picking up 1 more share of Manulife, another position I'm down on. The majority of the positions I'm buying this week are giving me the ability to dollar cost average lower and bring down my average cost. I'm only slightly down on Manulife, like 1 or 2%. But again, this is another stock that's been hit hard. So I'm going to buy 1 more share of Manulife, hopefully below $24.50. I think this is a great buying opportunity for Manulife, so I'll buy 1 more share. And then the last stock on my list to buy is just Smart Centers. Again, if you've seen these videos, you know that this is a great monthly dividend stock, so it pays every single month a dividend. So this is one that I just continue to buy below $30 per share. That's kind of my benchmark for Smart Centers, as it just continues to add to that monthly income and again helps grow that snowball a little bit faster. So that was my weekly watch list, and to recap, I'm kind of focusing and pivoting to adding more to my ETF positions, especially my US based ETFs such as my NASDAQ 100 and my S&P 500, just to get my account some more US exposure and trying to get around 25% of my account in US stocks or US ETFs. And hopefully as a Canadian investor, this is just going to give me access to the growth that the US has, and then also just continuing to add to stable, great long-term Canadian dividend stocks that not only grow in share price, but also grow their dividend payouts. Those dividend growth stocks are really what's going to help me grow and be able to live off of my investments one day in the future. So I hope you guys enjoyed this video. If you did, make sure to smash that like button and subscribe to the channel. Lots more content coming your way. I'll see ya in the next one.